All right, would you look at that, guys? We are still alive, we're thriving, we're doing well, and even though the market's tanking, we're able to take advantage of a lot of the things that are going on. So it has been absolutely crazy with what's been going on with this pandemic around the world. I've been into stores like Target to just go pick up some of the essentials and realized, a lot of the aisles are looking pretty bare. And one of the things is toilet paper. It's really shocking to go into Target, look at the shelves and realize, oh my God, there is literally no toilet paper in here if people needed to buy that. Now, luckily, I have a surplus. I have enough toilet paper to get me through this, but I'm not one of those crazy people who went out and picked up every single roll that I possibly could, ensuring that I'm set for months and months on end. That is where we're seeing a lot of the issue. But it is pretty eye-opening to go and see and just look at all the things that are missing there. Even just looking at the groceries that you want to buy, the shelves are pretty empty. Now, one thing for me, I'm experiencing directly because of the impact of the pandemic. I've been completely remote from work for the past week, and it really does start to get to you when you're cooped up inside and you really can't leave your house. There's no reason to, and you can't really do too much. So what I've been trying to do, is just get out, enjoy the day when I can, and keep my social distancing, but be able to experience, life outside of just my bedroom, outside of my apartment, and outside of doing the work that I am doing. So that is one way that I've been doing, but let me know what's keeping you busy during this time. If you have to be locked up inside, what are you doing to pass the time? So I thought today would be a very great opportunity to make an investment video, and an investment video on how to invest during a bear market, the strategies, the tips I'm using, maybe some of the companies that I've been looking at, but there is a lot of different ways you can go about it, and I wanted to make sure I presented you guys with my thoughts, my opinions, and how I think that somebody should be going about a market like this. So let's get right to the video. So first off, if you guys are new here, you haven't been to this channel before, I do a lot of investing content. I have a ton of different videos out there. You definitely don't want to miss some of those. So make sure you're subscribed to the channel. If you're interested in investing, you're interested in making money, then this is the channel for you. So I do the Robinhood challenge on this channel. I invest $100 every single week, and that is not stopping because of the market right now. So what I wanted to talk about is I actually have 5 tips that I'm following, 5 things that I think is very important to consider when you're looking at how to invest during a bear market. So I'm just going to jump right in and start talking about the first one. Now, the first one is knowing your investment style. So you could be a long-term investor, you could be a short-term investor, a penny trader, a day trader. There's a lot of different things that you can be investing for your style, but understanding your style and knowing how to make those investments properly, I think is the most important thing. So for me, I can only speak to long-term investors. I tried a lot of the other investment styles. They just didn't resonate well with me, but being a long-term investor in a market like this, it is super beneficial. Now, I've been getting some comments on videos, people like, oh my God, why are you investing in a time like this? But honestly, this is one of the best times to be investing as a long-term investor because you're just driving your costs down on a lot of your different investments. And I've been really nailing this in the past couple videos, so I hope I'm not too repetitive for you guys, but that is the main benefit that's been going on for me in my portfolio right now. It's just that I've been able to dollar cost average as a long-term investor, and I really like being able to take advantage of that. But being a long-term investor in a bear market, I think, is really a lot easier than a lot of the other styles because you still can't time the market. So what's been going on is the market's been so volatile lately. We're having huge upswings, huge downswings. I mean, we're setting records with what's been going on in the market, and that's something that you can't really time extremely well, and you need to be very cautious of your investment style. And if I'm a long-term investor, I don't need to worry about any of that crap. I don't need to worry about where the market's going to be tomorrow, in 5 days, 7 days, heck, maybe even in 2 years. It doesn't even matter to me. All that matters is that my portfolio is structured for the super long term. I'm talking 30, 40, 50 years down the road. I'm not going to be touching this money. So that is exactly what I'm trying to do, and just continuing with that mindset will help my portfolio. So the second tip that I have for you guys is establishing and sticking to a goal. I think it rolled over pretty nicely, but obviously my goal as an investor is long term. Like I said, I have many years to establish my investment portfolio, many years to, build up what I'm trying to do, but my main goal is on dividend income. So I want to be able to make enough income from my dividend payments to cover any expenses I have, whether it's my rent, whether it's my mortgage payment, gas, utilities, all these different things. I want to be able to cover all of that with my dividend payments just so I can live financially free. I don't have that financial burden over my head, and that way I can really do whatever I want in life. And I know that's going to take a while to get there. And just talking to a few different people, I know a lot of them are thinking, well, you're just saving all this money now. You're not going to spend, and then you're going to be old and not be able to enjoy your life. But I really hope that I can progress along, be smart about my decisions on what I am and what I'm not buying, so that way I can still, take vacations, still be able to take advantage of the financial situation that I've been blessed with, being able to have a secure job right now and not really have to worry about any of that stuff, and just live life to the fullest. So I know a lot of that is cutting unnecessary expenses, eating out, going out every single weekend, all those different things, which is very easy for me to do, and I'm still having just as much fun. I go out every now and then, I just don't make it a common weekend occurrence. There's a lot of other things that I can do for fun, whether it's go out on hikes, there's a lot of free activities out there, or even some deals that I find all the time. So I'm still living my life how I want to be living my life, and I'm not stressed or worried about, not being happy or any of that stuff, because right now I'm perfectly content with how everything is going. Now, the third tip that I have for you guys when you're structuring your portfolio, when you're investing during a bear market, is to hone in on your diversification. Make sure that you are properly diversified, so that way you have an extra layer of security. You don't have to worry as much about where the market's headed, what's been going on. So what do I mean by that diversification? Well, if you're an older investor, it doesn't necessarily pertain to me as much, but a lot of people look at the bonds stock ratio to be about 60% stocks, 40% bonds. Also, another way to measure it is you take 100, you minus your age, and that should be how many stocks you have in terms of a percentage. Some people say you take 120 minus your age. So there's a lot of different methods of calculating it, and there's a lot of great articles you can read online that help just figure out that diversification, but there's several different layers that you want to consider to diversification. So where I'm more invested in stocks because I have such a long time for my portfolio to grow, I don't really need to worry about it now. I know I've been saying that a ton, but it's super nice to just be able to invest in stocks and not have to think twice about that. But ways that I'm trying to diversify in the stocks that I'm investing in, I want to have different industries. Think about what industries are going to be doing extremely well in this market right now. There's a lot of different tech and services industries, healthcare. There's a lot of different options that you can consider out there. Obviously, you got companies like Netflix. Netflix is, I think, around $345 right now per share. But one thing about Netflix is they actually have to lower the bandwidth they're using because they're getting so many users to start, because all you can really do right now is sit inside. Another tech company is Zoom. Zoom is one where you have video conferencing. It's similar to Skype, and they've been on the market for a little bit under a year, but Zoom is pretty interesting, and they've had great success because of the pandemic, everything going on. So there is money to be made on the market still. It's just you got to be a little bit more strategic about what you're investing in. The way I diversify my portfolio, I also have ETFs. I think that's extremely important. An ETF acts as a basket of stocks, where if you invest in an ETF, you're getting a piece of a lot of different companies out there. So SPHD is one of my favorite, and if you buy one share of SPHD, it's like you're buying into 75 different stocks. So that's extremely diversified, and one of the emphasis on my portfolio right now is just trying to buffer up my ETF holdings. All right, guys, my fourth tip for you is to don't obsess over what's going on. Don't fear the red. Seeing red doesn't always mean that you're going to have a terrible portfolio. Everything's burning. Everything's going to be doing super poor. It could bounce back at any point in time and go up higher than what it was before. No one can time the market. You don't really know what's going to be happening. And in my own opinion, I do believe that the market's going to continue going down. So I still invest, and I'm still seeing these red numbers appearing, but I'm really not too worried about it. I'm actually investing more and more as I see more red, because I'm just having way better opportunities to buy into the stock market. So I've been having several different conversations, whether it's in the comments section, whether it's on my Twitter account, my Instagram account. There's a lot of different avenues to reach me. If you guys haven't followed me on some of those socials, you might want to do that. The links are in the description for that. But just know that you're asking me some of these questions, should I sell this stock? Should I sell this stock? I tend to try to steer away from specific questions like that, only because I'm not a financial advisor. I don't have the authority to answer a lot of those questions, but I do enjoy sharing my outlook with you guys on stocks that I'm investing in, what my strategy is, and what I'm thinking, my mindset. I think the biggest thing for me right now is understanding that it's not going to be green for maybe a long while in my portfolio, and that is okay with me. So I'm just trying not to obsess, trying not to look at my portfolio, because I feel like I could really open up my Robinhood app, open up different brokerages, and literally just hone in and stare at what's going on all day long and be so content with that. But I try not to do that because it is really distracting, and it does get a little discouraging just to see the portfolio value continue to drop and drop and drop. My fifth and final tip, and what I think is the most important thing when you're investing during a bear market, is to don't invest using money you can't afford to lose. Make sure you have an emergency fund established. For me, that is 6 months to a year, where if I lost my job, if all these horrible things were happening, I would be able to sustain myself for at least that long to be able to get back on my feet and figure out a game plan moving forward. It's important to be cautious with your financial situation, and if you can't afford to invest right now, it might be really hard for you to put your money in the market because you're going to be seeing these red values, get discouraged, and pull your money out. And really, I'm not recognizing any of these losses, because in the future, if I just hold out long enough, I expect it to bounce back to be higher positions than what it was before on the market. So the conditions will change and my portfolio will eventually turn green, and that will be looking really great, especially if I keep dollar cost averaging my way in. So yeah, those are the 5 tips that I have for you guys. If you want to check out some of those free stock videos I mentioned at the beginning of this video, then I'm going to have them linked on the top left hand side of the video at the end on the card here. Thank you so much for checking out this video. I hope you guys are all doing well. Stay safe, don't get sick, and have a great day.